Hello and good morning. You're watching Market Cafe with me, Snehisha, and with me is Shreyansi Singh. And well, you're watching ET Now. Thanks so much for starting your day with us. Now, this is a show where we'll take you through all the important stories that we've been tracking for you since yesterday post-market hours and also last night while we were fast asleep. All the developments happening in India as well as globally. And in the second half of the show, we'll also take you through all the stocks that could be potential buzzers in today's trading session, as well as what brokerages are flagging off for this morning, the derivative setup for today, and all the cues that you need to be keeping out on your radar for today's trading session. With that, let's kickstart the show, Shreyansi, and take us through what the global handover is looking like. Dow seems to be back to its winning ways. Good day coming for the US market.
Absolutely winning day across the board, right? Because when you look at the overnight moves, you're looking at a winning session. First off, let's take a look at what futures were doing. Not that much, because across the board you do have futures hovering near the flat line for all the three indices. And when you look at the overnight moves, following a winning session, like these overnight moves that I mentioned, followed a winning session that pushed up the Nasdaq Composite up about 0.7% to a fresh closing record as well. When you look at the S&P 500, you're looking at gains of about 0.5% thereabout, bringing the broad market index about 0.1% off of its record closing high. And when you look at Dow Jones as well, you're looking at gains of about 0.3% as well. Now, investors are awaiting Wednesday's key inflation report for more insight into the state of sticky inflation, and that is something that they're keeping an eye on. In terms of other economic reports, you do have retail sales figures for April and May's Empire State Manufacturing Survey, as well as the housing market index as well. But in terms of data sets that we've seen thus far, stubborn prices have remained a key concern for markets in recent weeks, spurring fears that the Federal Reserve may delay its rate cutting cycle, and Tuesday's producer price index for April also contributed to that narrative as well. Now, when you look at the final stages of earnings season, then that continues with results from Cisco Systems after the bell. Lots of cues to watch out for the Wall Street, and that looks like the handover then. And when you look at Europe, then the Pan-European Stock 600 index ended about 0.2% higher, with most sectors in the positive territory. So when you look at auto stocks, they led up the gains, up more than 1.3% for the session as well. When I'm looking at DAX as well, closed with a downtick of about 0.1%, but largely a good handover coming in from both Wall Street and Europe. But that being said, Snehi, how are you looking at the oil markets then?
Well, good moves coming in from equities, but oil not so much, right? Because oil prices have settled lower on Tuesday after US data has stoked concerns that interest rates may stay high, but potential risk to supply from Mid-East tensions and the wildfires in Canada that we did see yesterday put a floor under these prices. So now when you take a look at where both of these indices have closed, let me take you through what's happening on that front. And WTI has closed above that $78 per barrel mark at 78.3, and Brent crude is very close to $83 per barrel mark at $82.65 a barrel. That is where Brent has also closed. Now let's also take a look at a lot of factors that have been influencing this fluctuation that we've been seeing in oil prices. US producer prices have increased more than expected in April, feeding fears that the Fed Reserve may keep borrowing costs elevated to fight the inflation. We'll tell you more about the PPI print that has come in. Also with that, Fed Chair Jerome Powell said he expects US inflation to keep declining through 2024, but also warned that he's less confident now since prices rose more quickly than expected through the first quarter. We'll of course be taking you through more detail about what he has said yesterday as well. Now, US consumer price data is expected today and will affect timing of rate cuts that could spur economic growth as well as oil demand. Now, another stronger than expected inflation reading could feed worries that a too hot economy will force the Fed to raise rates again, which could hinder growth. Meanwhile, yesterday, the Organization of Petroleum Exporting Countries, OPEC, like it's commonly called, stuck to its forecast for relatively strong growth in global oil demand in 2024 and said there was a chance that the world economy could do better than expected this year. OPEC's monthly report said that the world oil demand will rise by 2.25 million barrels per day in 2024 and by 1.85 million barrels per day in 2025. Now, energy markets were also spooked. They were also watching for wildfires in remote Western Canada that could buoy prices by disrupting oil supplies. Remember, Canada has a 3.3 million production barrel per day production capacity and is a key supplier of heavier crude. Now, meanwhile, conflict in the Middle East could also be lending a floor to prices. Also, remember last week, US crude oil stockpiles have been were expected to have fallen last week as well. So, lots of factors coming in and hampering this entire demand-supply equilibrium that oil has been seeing. And on the back of that, we've been seeing some fluctuation in oil prices. But well, yes, that's largely the handover when it comes to what's happening in the oil and energy markets.
Absolutely, and there's a lot to watch out for, right? So when you look at what you should be keeping an eye on, you do have the MSCI recheck. The May review of the MSCI indices will be conducted today with the adjustments coming into effect on May 31st then. And in terms of global cues then from the US, you do have the CPI data as well as retail sales data like I mentioned earlier. Now in terms of expectations then for the CPI data, economists do expect the consumer price index to show a 0.4% monthly gain or a 0.3% increase excluding food and energy. So those are the kind of expectations that we have as far as CPI goes. When you look at Eurozone then, there's industrial production as well as GDP data, and from the China you do have the rate decision. So keep an eye on that as well. In terms of the earnings calendar, you do have from Nifty companies, you do have M&M as well as JSW Steel reporting their numbers. So those earnings will be key to watch this week. And in terms of corporate action, of course, there's Canara Bank that has a stock split from rupees 10 to rupees 2, as well as Solara Active Rights issue in the ratio of 1:3. So keep an eye on Solara Active Rights active as well. And in terms of the primary market action, you have listing of TBO Tech as well as Aadhaar Housing on the bourses. You have Go-Digit that is opening for subscription, and the lock-in period is also ending for Ask Automotive as well as Intero Healthcare. So those counters will remain in the spotlight. And speaking of what will remain in the spotlight, PM Modi is also holding a roadshow in Mumbai's Ghatkopar, and Russian President Putin also plans to visit China. So all of those will remain in focus for sure. And in terms of other things that will remain in focus, you do have the European Commission spring economic forecast as well that will remain in the spotlight.
Well, absolutely, and we also have some comments coming in from the Fed. You have Minneapolis Fed President Neil Kashkari. He will be speaking on the US economy. Remember, PPI numbers already in, CPI numbers expected today, and Fed Jerome Powell has also given his comments. So a whole host of Fed President comments will be key to watch out for. But let's move on and talk about the biggest global stories this morning. And the most important cue that we got from the US yesterday was the US producer prices, because they've increased more than expected in April amid strong gains in the cost of services like portfolio management and hotel accommodation, indicating that inflation remained stubbornly high early in the second quarter as well. Now, prices rose 2.2% year-on-year in the month of April. Meanwhile, services accounted for nearly 75% of the increase in PPI. This reading followed the 1.8% increase recorded in March and came in line with the market expectation.
And the biggest talking point this morning then, comments from the Federal Reserve Chairman Jerome Powell, reiterating that inflation is falling slower than expected, which makes a case for the central bank to hold rates steady for an extended period then. And the central bank leader also noted that the rapid disinflation that happened in 2023 has slowed considerably this year and caused a rethink of where policy is headed. While he expects inflation to come down through the year, he also noted that has not happened so far yet. And however, he also repeated that he does not expect the Fed to be raising rates. The Fed has been holding its key overnight borrowing rate in a targeted range of 5.25 to 5.5%. And though the rate has been there since July, it is the highest level in some 23 years thereabout. With that, it's time to listen into snippets from that address as well. Listen into what he had to say as well.
On a 12-month basis, headline inflation got as high as 7.1%, is now down to 2.7%. Core inflation got as high as 5.6% and is now at 2.8%, so it's down by half. That progress, though, really happened over the course of last year, and particularly the second half of last year. The first quarter in the United States was notable for its lack of further progress on inflation. We had higher readings in the first quarter, and higher than we expected. We did not expect this to be a smooth road, but these were higher than I think anybody expected. And so what that has told us is that we'll need to be patient and let restrictive policy do its work. If I turn to the outlook just for a second, I would say we expect continued growth, 2% or better. We expect the labor market to continue to be strong, but to move further and further into balance. And I expect that inflation will move back down on a monthly level, on a monthly basis, to levels that were more like the lower readings we were having last year. It's really a question of keeping policy at the current rate for a longer time than had been thought. I think by many measures, the policy rate is restrictive. The question is it sufficiently restrictive? And I think that's going to be a question that time will have to tell. Entertain the possibility is, that could be a very small probability, but I have said that I don't think that it's likely, based on the data that we have, that the next move that we make would be a rate hike. I think it's more likely that we'll be at a place where we hold the policy rate where it is.
All right, that's the word coming in from Fed's Jerome Powell. But in a largely expected move, US President Joe Biden has slapped steep tariff hikes on an array of Chinese imports, including electric vehicle batteries, semiconductor chips, as well as medical products. Now, the new measures affect $18 billion in imported Chinese goods, including steel and aluminum, semiconductors, electric vehicles, critical minerals, as well as solar cells and cranes. The EV figure, while headline grabbing, may have more political than practical impact in the US, which imports very few Chinese electric vehicles. In response, China has vowed to defend its interests in the face of the new lofty tariffs and warned that the trade barriers would impact the wider relationship between the two economic superpowers. We also have comments coming in from Janet Yellen, where she says that China tariffs won't cause meaningful US price hikes, and she also hopes that Beijing reacts in a rational way.
Absolutely, and we have Ashesha standing by to explain what these tariffs mean for the burgeoning semiconductor as well as EV industries. Ashesha, take us through what this really means then.
Well, yes, US President Joe Biden has directed his trade representatives to increase tariffs on import of certain products from China. The White House says that China's unfair trade practices are threatening American businesses and American workers, which is impacting the US economy, because of which tariffs have now been increased on certain products, which includes electric vehicles, electric vehicle batteries, solar panels, and certain metals like steel and aluminum. Now, on certain steel and aluminum products, tariffs, which were earlier at about 0 to 7.5%, have now been increased to as much as 25%, which could have an impact on the global commodity market. US says American workers face unfair competition from China's overcapacity in steel and aluminum. Remember, China is the largest producer of steel and aluminum, and it supplies these commodities globally, which has an impact on the global commodity market. They also say lower priced Chinese alternatives that are produced with higher emissions are flooding the US market, which is having an impact on the US economy. And it's not just steel and aluminum, there are other products also where tariffs have been increased. For instance, for semiconductors, tariffs have been risen from 25% to 50%. For electric vehicles, from 25% to as much as 100%. For lithium-ion electric vehicle batteries, it has been risen from 7.5% to 25%. For certain critical minerals, it has been increased from 0 to 25%. And for solar cells, from 25 to 50%. So yes, a big move that has come in, which can have political repercussions and impact on the global commodity market as well as the electric vehicle market back home in India.
All right, Ashesha, thanks so much for detailing this entire news event for us, and we'll just have to wait and watch about how this, if any, has any impact in India as well. Now, let's keep on going with the news flow then, and among global headlines, you have Japanese car maker Honda, because that plans to scale down its production workforce in China with roughly 1,700 employees reportedly decided to voluntarily leave the company. The employees to leave make up 17% of the production staff. Now, do remember, PV sales in China have remained jittery in April as consumer spending took a backseat amid a shaky economic recovery. Intensified pricing action is also a key factor to note.
Alright, and then Google also amps up its AI game, unveils what it calls the lightest and most efficient artificial intelligence models at its annual developer conference. Company announced new additions to its AI model series Gemini. The newly launched Gemini 1.5 Pro is capable of interpreting massive sets of data, summarize conversations, and also caption images and videos. So exciting update coming in from Google there.
Well, absolutely. Very exciting stuff that's been happening globally. Lots to talk about this morning, but we'll be right back after this short break. You stay tuned, because when we return, we'll take a look at how the Asian markets have opened up this morning. So you stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at the Asia Pacific markets. Then in Asia Pacific markets opened higher, tracking Wall Street gains overnight. Now markets in South Korea and Hong Kong were shut on Wednesday for a public holiday, and investors are also assessing Australia's annual budget release late on Tuesday. On your screens, you should be able to see ASX 200 uptick of about 0.5% coming in there on your screens. And then when you look at Japan's Nikkei as well, you're looking at a little bit of green coming in there as well, 0.5% uptick coming in for Nikkei as well. When you look at Shanghai, then that one is in the red. On your screens, down about 0.5% thereabout. So that largely looks like the handover coming in from Asian markets this morning. But back home then, we closed around the 22,217 mark. And today what the Nifty implied is indicating is a gap up open, a good 160 odd point uptick coming in is what is being penciled in based on the Nifty implied on a spot basis. And when you look at the move coming in on a futures basis, also a good start is what is being penciled in this morning.
Alright, well, so 150 point uptick is what we're hoping to open at compared to yesterday's close, and global handover is also looking pretty good, so we can hope for a rather good trading session today.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at some important commentary coming in then. And Amit Shah said that buy before June 4th and stocks will shoot up. When you look at the commentary coming in from External Affairs Minister S. Jaishankar, he also said that the resolve to invest in India will strengthen as polls conclude. And now Finance Minister Sitharaman has also said that there's no reason for market volatility as well, as PM Modi is coming back on June 4th. Listen to what they had to say then.
Stability of government is the first criteria for markets to be efficient. Stability of government, stability of policy, particularly of taxation policy. Most investors who come to visit India today are recceing to see where their money can be placed or parked. India's financial markets have far exceeded everybody's expectations in the recent past.
It's very clear where the election is going. The exact number people may have a debate. In democracy, they should be debating it also. But I'm very sure as round after round takes place, markets will be less and less volatile, because the markets will see exactly what those numbers, or will get a sense of where those numbers will end up, and I'm very confident those numbers will end up very, very good for us.
Alright, well, let's move on then and talk about some stocks that are going to be in focus, because MSCI has announced the latest rejig in its indices, the adjustments of which will take place on the 31st of May. Now, stocks like Mankind Pharma, Solar Industries and more could see the inflows on the back of inclusions. Somit, my colleague, is joining us with more details on this rejig. Somit, good morning. Take it away.
Well, MSCI has come out with its May 2024 rejig announcement. Now, if you see in the global standard index, nearly 13 stocks are getting added, while 3 of them are getting removed. And in the small cap index, if you see 29 stocks are getting added, while 15 of them are getting removed from the index. Now, the adjustment regarding this additions, inclusions, or the changes in the weightage will lead to inflows and outflows, and that is expected on May 31st. Now, as per estimates, around $2.5 billion of inflows are expected in India on the back of this change. And India's weightage in the MSCI index increases to around 19 odd %. So key stocks that one needs to keep an eye out for. Firstly, in the global standard index, if you see it's Sundaram Finance, Mankind Pharma, Solar Industries, Torrent Power, which could see an inflow of anywhere between 140 to 198 million US dollars, which is nearly 11 to 24 times the 20-day average volume. Apart from that, it's Bosch, Thermax, Phoenix Mill, Jindal Stainless, PB Fintech, which could see an inflow of anywhere between 120 to 230 million US dollars, which is nearly 10 to 11 times the 20-day average volume. And then there is JSW Energy, Indus Towers, Canara Bank and NHPC, which could see an inflow of anywhere between 130 to 180 million US dollars, which is nearly 2 to 4 times the 20-day average volume. On the exclusion side or the deletion side, it's Berger Paints, Paytm and IGL, which are getting removed removed from the MSCI standard index, and the outflows because of this could be anywhere between 60 to 94 million US dollars. And then there are a few stocks which will see an increase in weightage like AU Small Finance Bank and Macrotech, and because of the increase in their weightage they could see an inflow of anywhere between 35 to 75 million US dollars. Then there is PI Industries, Dabur, ICICI Lombard, Bajaj Holdings and Reliance Industries, which will see a reduction in their weightage. Reliance Industries is the biggest one here, 168 million US dollars of outflows expected owing to reduction in weightage, which is nearly 1 times the 20-day average volume. Now when it comes to the small cap index, it's Sundaram Finance Holding, Green Lab Industries, RR Cable, Alok Industries, Dynamatic Tech, which could see an inflow of anywhere between 3 to 8 million US dollars, which is nearly 3 to 10 times the 20-day average volume. And few stocks which are getting removed from the small cap index are Nexus REIT, Tatwa Chintan, Borosil, Indoco Remedies and Rajratan Global, which could see an outflow of anywhere between 2 to 10 million US dollars, which is nearly 3 to 35 times the 20-day average volume. So keep an eye out for these host of stocks on the back of MSCI adjustment for the May 2024 review.
Absolutely, and those stocks will remain in focus, but what will also remain in focus is Bharti Airtel. So Somit, while you're with us, tell us about the telecom majors Q4 numbers then. It's a miss on all accounts then, right?
Well, if you see the consolidated numbers, yes, it's a miss on all front, be it revenue, EBITDA, margins or the net profit. But if you see the India operations, they are pretty much in line with what the street was expecting. The reason behind the consolidated numbers coming in below the street estimates is a weak Africa numbers, and Africa numbers were weak because of the currency devaluation. In fact, in the consolidated numbers, if you see, the company has also accounted for an exceptional loss of close to 2,500 crore rupees owing to this currency devaluation. But if you see the India businesses like the mobile, DTH, broadband and enterprise, they have reported pretty much in line set of numbers. When it comes to the mobile business, revenue and EBITDA are up around 2% compared to last quarter. Subscriber number came in at around 35.2 crore, while the ARPU number was up around 0.5% to 209 rupees per user per month. On the subscriber mix, if you see, because of this improving subscriber mix, the company's ARPU have also increased organically now. In fourth quarter, if you see, the company has added nearly 7.5 lakh postpaid numbers, which is nearly 3% higher on a sequential basis. And if you see the 4G and 5G net subscriber addition, that was also on the higher side at around 78 lakh as compared to 73 lakh that we had seen in the previous quarter. And also remember, this is the 9th consecutive quarter where the company has been able to grow its subscriber base organically. Apart from that, if you see, the company's consolidated net debt has also come down on a sequential basis. And on a positive side, if you see, for FY24, the company has announced a dividend per share of around 8 rupees, which is nearly double of what the company did in FY23, and this is despite the fact that they had received no dividend from Indus Towers and they had made a prepayment for spectrum liabilities. Also, when compared to Reliance Jio, if you see, the company's performance is pretty much in line. The revenue and EBITDA growth are at around 2%, very much similar to that of Reliance Jio. ARPU growth is 0.5% for Reliance Jio, it was flat. Subscriber base has increased again by 2% for both the subscribers, while the data traffic on both their networks have increased by around 6 to 7%. So pretty much in line set of numbers coming in from Bharti Airtel's India operations, but on a consolidated basis, it's a miss.
Well, alright, Swami, thanks so much for taking us through that. In line when it comes to India ops, but on a consolidated basis, a miss on all fronts for Bharti Airtel for Q4. But let's move on and talk about talk on the political front. And yesterday, PM Modi filed his nomination in Varanasi, and upon filing this nomination, he declared assets worth 3 crore rupees. So, what is the breakdown of all the assets he owns? Sumit is here with all the interesting details on this. Sumit, take it away.
PM Modi filed his nomination from Varanasi today, and a candidate has to declare his assets. So as per the records, PM's assets are worth 3.02 crore rupees. And if we divide the assets, this includes gold worth 2.67 lakh rupees held in the form of 4 gold rings, national savings certificates worth 9.12 lakh rupees. PM also holds 2.85 crore rupees in bank fixed deposit as per the affidavit. So if we take the comparative figures, in 2019 and 2014, PM Modi's assets, they have shown an increase. In 2019, he declared assets worth 2.5 crore rupees, and also in 2014, it was 1.6 crore rupees. So that's how the assets of PM Modi's assets are there. It includes both movable and immovable property. So it has to be declared. That's why PM Modi has declared his assets today. Well, all the candidates who are contesting elections, they have to declare assets officially, and that's what has been done by PM Modi today as well.
Alright, right, thanks Sumit for that roundup then. But we also caught up with market expert Ajay Bagga, and he also talked about PM Modi's aversion to shares and bonds. Listen into what he had to say as well.
I think it's good that he stayed away from stocks in a governance sense. But if you look at the returns, it's hardly 20% return in 5 years and with having inflows. Of course, the Prime Minister is a very big philanthropist also. When he moved out from Gujarat, whatever was his Chief Minister's salary in Gujarat, he distributed it with the Chief Minister's staff. So probably he gives away his salary, and this is just a portfolio return, but 20% return over 5 years, you are less than 4% CAGR, which kind of foots in to a fixed deposit heavy kind of a portfolio. So not ideal for you and me, and definitely for somebody age 74 post-retirement, not having any equity at all. I think it's a very inadequate portfolio. But what works for him is he will have a lifetime pension, he will have a house, and he will have a lot of other perks from the government, even when, as and when he decides to hang up his boots.
Well, let's move on and talk about the CBI and DHFL, because CBI has arrested former DHFL director Dheeraj Wadhwan in connection with a 34,000 crore rupee bank fraud case. Wadhwan was already charged sheeted by CBI in connection with this case back in 2022. Sameer Dixit, my colleague, is joining in with all of the details related to this arrest. Sameer, take us through all of these details and give us the lowdown on what this arrest is.
So that's a big development in the DHFL bank fraud case, where the former director of DHFL, Dheeraj Wadhwan, he has been arrested by the investigating agency CBI, and he was produced before a special court, and then he was sent to the judicial custody. But we are picking up from our sources that he was detained in Mumbai on Monday, where subsequently he was produced before the special court, and now he has been sent to the judicial custody. But if you see, the background of the case is that the DHFL bank fraud case, it is to the tune of rupees 34,000 crore. And his name, the former director Dheeraj Wadhwan name, was already there in the charge sheet that was prepared in the year 2022. But subsequently, if you see, then the investigating agency, they carried out their own investigation. As of now, Dheeraj Wadhwan was out on bail in the Yes Bank case, where he was earlier also arrested related to the Yes Bank case, and he was out on bail. And now, once again, he has been arrested by the central agency CBI. He was produced before the special court. As of now, he has been sent to judicial custody. Further, more details are likely to be released by CBI very soon.
All right, thanks Sameer for the latest update coming in on Dheeraj Wadhwan's arrest. But let's get a move on then. And Colgate also reported Q4 results. When you look at the revenue and EBITDA, then revenue is up over 10%. And when you look at EBITDA, that has also gone up by 18% thereabout. When you look at the profit after tax, that has gone up by 20%. And when you look at margins, then margin has also expanded by 229 basis points and is at 35.3%. Now, when you take a look at the domestic net sales coming in for Colgate as well, they were at 10.7% in financial year 24. Meanwhile, they've also declared dividends. And why I say dividends is because they do have a second interim dividend per share, that is 26 rupees per share, and a one-time special dividend as well coming in at rupees 10 in financial year 24. And that largely is the handover coming in from Colgate, in line set largely with the expectations.
All right, well, inline set of numbers coming in from Colgate. But let's move on and talk about another stock that's going to be in focus today, and that is Cipla, on the back of a block deal that is likely to take place today. And promoters of the group are likely to sell 2.5% stake. And let's take you through who the key sellers could be. And these could be Shireen Hamid, Samina Hamid, Rumana Hamid, as well as Okasa Pharma. This is obviously a source-based story, so pardon me, this is obviously given to us by sources. So we'll just have to wait and see see if this block deal actually takes through today, but very high chances that the block deal might go through today. Now, a little bit of details about what this block deal could look like. And sources tell us that the price range could be anywhere between 1,289.5 rupees per share to 1,357 per share, and the maximum discount that could be given is 5%. The total size of this deal could be around 2,637 crore rupees. And the sole broker in this entire deal is expected to be Kotak Securities, and the lock-in period for the sellers after this deal is going to be 90 days. So while all eyes will be on Cipla on the back of this anticipated block deal by its promoters.
Absolutely, all eyes will remain on Cipla. So keep an eye for that stock in today's trading session as well. But with that, let's get a move on then and take a short break. But we'll see you on the other side with more stock-related updates.
Hi there, welcome back. Thanks so much for staying tuned. You're still watching Market Cafe on ET Now. Now let's talk about a company that has come out with a rather good set of numbers day before yesterday. And that happens to be DLF. But yesterday we had the con call of DLF and some very good commentary coming in from the management. On the guidance front, they're looking at strong growth in the next fiscal, and they're also targeting sales guidance of 17,000 crore for FY25. Remember, that number has come in at 15,000 crore this year. So that's an uptick of 2,000 crores that they're penciling on the sales front for FY25. They also expect double-digit PAT growth to happen in FY25. So that's another positive indicator coming in, at least on the commentary front. Now, in terms of the key launches and the launch pipeline that the management has spoken on the con call, they believe that in FY25 they're looking to launch the project in Goa in the second quarter. Lux 5 project will be launched in quarter 3 of FY25, and the project in Mumbai, that Mumbai foray, is going to be launched in quarter 4 of FY25, along with the next phase of Pravana as well. That will also be launched in the quarter 4 of FY25. Now, in terms of other highlights then, on the land bank addition, they have said that the Sector 61 Gurugram land has been acquired at a very profitable rate of just 2,500 rupees per square feet, and this could lead to a lot of profit for the company because it has sales potential of 20,000 crore rupees. So this is what they've said on the land bank addition. On the collections front, then, they believe that the Chennai land bank has this amount is excluded actually from the collections because the entire Chennai land sale collection was collected in quarter 4 itself, and that has come to 7,300 crores. So if you exclude this amount and talk about the FY24 collections, that has come in at 7,600 crores separately, and they also expect 15% growth in collections going ahead into FY25 as well. So that's another positive commentary coming in. On the margins front, they believe that margins are in the range of 35 to 40% as of now, and they believe that the launch of Lux 5 can propel margins to the mid 40% levels as well into FY25. Now, interesting note coming in on the cash front, on the cash balance front, where they've said that the total of 6,000 crore rupees that they have in cash, out of that 4,000 crores has been escrowed in the RERA account and can only be used for construction activities. They want the balance to eventually come down to 1,000 crore rupees. Also, they aim to bring gross debt to a near zero level as possible. They've also said that they won the battle against net debt, and now gross debt is the battle that they need to conquer next. Now, in terms of the renting portfolio or the leasing portfolio, the exit rental is likely to be at 5,900 versus to 6,000 crore rupees in FY25, and rentals for Chennai Downtown 1 and 2 will start trickling in from June as well, and Downtown 3 will be completed in July, August, and the rentals for that will start from March 2025. So, well, lots of positive highlights coming in this DLF by Shreyansi and the DLF con call that they conducted yesterday.
Absolutely, lots of important updates. And on that note, why don't we just go in and listen into what the management's guidance was then?
We are clearly looking at a strong growth in the next fiscal and hopefully targeting a sales guidance of 17,000 crores for fiscal 24-25. The margins, frankly, with the launch of Lux 5 will only expand. That is very clear. In fact, as we have always guided that our current margins are in the range of the late 30s to 40. And I think post Lux 5, our weighted average margins will clearly be in the mid to late 40s as a combined percentage. And I think that that's where we are. If you look at the total cash balance that we have, it's about 6,000 crores, of which 4,000 crores is escrowed in the RERA 70% accounts. So those can be used only for construction and approvals really, and for little else. So practically, while we have a 6,000 crores cash balance, 4,000 crores is in the 70% RERA account, which is not accessible for general business purposes. Yes, the balance 2,000 crores we believe is maybe at least 750 to 1,000 crores higher than what we would like it to be. So I think we would want to eventually have that number stabilize around 1,000 crores. So I think that's a correction that you will see across the next 2 quarters, and hopefully hence that will also result, while having now won the net debt war, the next focus is to win the gross debt war and also get the gross debt down to as near zero as possible.
All right, then that's the word coming in from the management of DLF. But then let's get a move on then and go across to Ansh standing by. And as promised, let's get you the brokerage roundup coming in then.
Right, so UBS has come up with a brokerage note on chemical industry and few of their stocks. According to them, after a period of destocking, demand is expected to increase, but price may remain low due to excess production capacity. Now for PI industry, they have initiated a buy rating with a target price of 4,800, which is 30% above the current market price, which is a very positive sign. This is on the back of strong growth, management track record, less volatile business model and potential scale up of the pharma vertical. Apart from this, Navin Fluorine is also in focus as they have initiated a buy rating with a target price of 4,250, which is again around 27% above the current market price. Again, a very positive sign for the stock. And this is on the back of growth opportunity in agrochemicals, contract development and manufacturing, that's CDMO. Aarti Industries is also in their list and they have initiated a sell rating actually with a target price of 615, which is around 4 to 5% below the current market price. So a mildly bearish view coming here. And this is on the back of companies actually expanding capacity in existing and new areas, but faces higher cyclical dependency and debt level despite positive EBITDA guidance. Gujarat Fluoro is also in the list and they have also initiated same sell selling with a target price of 3,000, which is over 8% below its current market price. So here also they are getting very bearish, and this is on the back of companies export to Chinese overcapacity in fluoropolymers, which is with its electrical vehicle business still in early stages. Now coming out of the chemical space, we have a JP Morgan report on Apollo Tyres, and they have maintained a neutral stance with a target price of 535, which is 12% above its current market price. And this is because while the company has actually demonstrated strong free cash flow and reduced debt, its revenue growth needs improvement. Citi has come up with a report on 361 and they have initiated a buy rating with a target price of 920, which is around 21 to 22% above its current market price. So very positive for the stock. And Citi sees strength in new regular investment and addition of new clients to families. They also anticipate higher income from transaction, especially from unlisted market deals and broking. So keep an eye on the stocks.
All right, Anshul, thanks so much for taking us through that. Let's just focus and talk about the action in the primary markets today, because two companies, TBO Tech as well as Aadhar Housing Finance, are going to be making their debut on the bourses today. Let's go across to my colleague Sharad to find out the listing scenarios of both the companies and how the street is expecting both of these IPOs to list on the bourses. Sharad, over to you.
Well, two important main board listings coming in. The first one being TBO Tech. The IPO price was at 920 rupees per share, and as per the grey market premium, it's expected that the listing gains would range between 50 to 70%. Now, even the subscription numbers, if you look at it, that has been on the higher side, 87 times. But the valuations has been on the higher side. For the FY24 PE numbers, if you look at it, that is coming in at almost 65 times already. And of course, we are expecting a strong listing, especially between 50 to 70%. So the valuations are expected to go up. The second company which will be coming in the bourses would be Aadhar Housing Finance. The IPO price is at roughly 315 rupees per share, and it's expected that the listing gains would range in a muted manner between 10 to 20%. And of course, the subscription numbers, that has come in almost 26 times. Now, we did an analysis of price to book ratio for FY25, and over here at the IPO price itself, we are expecting a 3 times price to book numbers for FY25. And also, if you look at it, between 10 to 20%, it's expected to range between 3.3 to 3.6 times. But of course, a lot of primary market action is happening as two main bourse listing is happening today.
Well, absolutely, Sharad. Lots of primary market action that you should be keeping an eye on, and lots of stocks that we talked about earlier as well that you should keep on your radar as well. But with that, we're completely timed out on this edition of Market Cafe on ET Now. From me, Shreyanshi Singh, Snehi Shah, as well as the entire team that put this show together. Thank you so much for tuning in. But you don't go anywhere, because the market takes all of the action forward.
you like this video, then like, share and subscribe to ET Now.